We know that the recap seems done and settled. What is the dust settled yet? We don't know. Well, Agusto and Co. They decided to capture the banking industry. Recently, a couple of weeks ago, the rumor that the bank was folding up in Nigeria affected the stocks and investors' confidence. And I said, well, I don't think an existing bank that has the backing of the NDIC and the CBN can easily fold up in Nigeria at this time. I believe we have gotten to that stage. But anyways, let's look through the lens of Agusto and Co. We're sharing their Nigerian banking industry report for 2026. And some of their findings is this. They said in the financial year ended 31st December 2025, the industry was shaped by recapitalization and the termination of regulatory forbearance. Remember those two factors? They were very active conversations in the industry. Forbearance termination induced a 2.9 trillion naira write-off, representing 63% of the 4.6 trillion additional capital injected. And then at the end of the recap, we saw 4.6 trillion naira fresh equity into the market, into the industry, the banking industry, and 73% of that was sourced by domestic investors. Isn't that a good thing? Shareholders' funds we saw expanded by 31.2%. Capital adequacy ratio that strengthened to 25.5%. Full year 2024 it was 18.1%, so it went up to 25.5% year on year, and then 12.7% year on year increase in total assets and contingents in the sector. However, Agusto has some concerns. The first is potential capital shortfall of 486.7 billion naira at the holding company level, and we know that it's still unfinished conversation around the holding company, the holdcos. CBN has started that conversation. Another concern of Agusto is the forbearance write-off where necessary. They believe that there's a probability that it has masked the true extent of deterioration in the loan book. And of course, we know that's a threat to the industry. Impaired oil and gas credit exposures accounted for 62.2% of stage 3 loans. That's up from 32.2% in the prior year. Let's face these concerns now with the head of financial institutions ratings at Agusto and Co. Mr. Ayokunle Olubumi joins us virtually from Lagos. Mr. Olubumi, good morning. Welcome to the program. Let's just go straight. We don't have a lot of time, unfortunately. Let's just go straight to the concerns of Agusto, beginning with the whole core. We know that the CBN, I think it's an unfinished, we don't have a definite stance yet when it comes to the whole core, but we saw some conversations and responses from the CBN and stakeholders. What's the situation now? What are your fears concerning the whole core companies?
Okay, good morning. Thank you for having me. And like you mentioned, the discussion about the old co-regulation is still ongoing. I think the directive is not too clear. For instance, the way it's worded, it won't affect only the holding company, but it will also affect the banks with international banking license. So if you look at it, we have about 7 holding companies, right? And then we also have about 3 or 4. If you had, in addition to those holding companies, we have some other banks that also have international banking license. And also the concern also is that we've just concluded the capital raising exercise. You realize that it's going to be challenging for the old code to even go to the investors again and even ask them for additional capital. It gives also concern about capital planning. When do you even expect to have additional capital? But like you mentioned, it's still ongoing. The CBN is still engaging with the stakeholders, and then we expect that before the end of the year, we'll have a landing about this regulation. Having said that, based on the prudential guideline that we have available, right? Currently, just about 500 billion additional capital will be needed by the opening companies for them to comply with regulation the way it's stated currently.
And then you also are worried about the true extent of deterioration in the loan book when we look at the forbearance write-offs.
Yeah, I think the forbearance write-off. It's helped us to even see, because if you look at what has happened over the years, we've had some loans that are not performing, but we've been using the forbearance to actually even max it. So what we are gradually saying now, we are removing the layer and trying to see the true state of the loan book. In and what I'm saying is just we are actually moving towards the cleanup of the industry or the industry loan book, right? With the write-up that we had, right? Because if we've not had that write-up last year, the industry, the impaired loans will have actually been up to 11%, right? After removing the forbearance, if you've not had the write-up, but the write-up of 2.9 trillion moderated the impaired loan ratio to 6.5% that we had last year.
And oil and gas, you think, is the most exposed, accounted for 62.2% of stage 3 loans, and that's higher than the prior year.
Yes, because if you look at the bulk of the forbearance loan, over 80% of them are in the oil and gas sector. So expectedly, when the forbearance was removed, you see that the bulk of the exposures that are affected are actually the oil and gas. And if you notice that the downgrade that we had last year, the bulk of it are actually the oil and gas. So the oil and gas sector has actually been a blessing, or has also been a concern to the industry, because on the one hand, if you look at the size of the loan book, it accounted for about 30% of the loan book, and in terms of the impaired loan, it's just about 62%, which is very, very significant.
So when we put these concerns that you have shared in your report, does it present any real threats to the banking industry in Nigeria?
I would think that the industry is in a better state. What we've been doing over the last 2 years is to try and clean up the industry. And what the CBN first did was ensure the bank raised capital, such that any cleanup that you are doing, you have adequate buffer to support you to be able to do the cleanup effectively and also grow your loan book, grow your industry. So what we've been doing gradually, we've removed forbearance. Now the CBN is coming out with directive to ensure that the risk management structure is strengthened, such that we don't filter the capital that we've actually raised. So what we are doing now is a gradual cleanup of some things that we've been maxing and keeping under the carpet over the last few years. So I think the industry is in a better state, and things are gradually even getting better in the industry.
Yeah, so from an informed perspective now, when you hear, like, I don't know if you heard that rumor of a bank is folding up and what's your reaction, or what can you tell Nigerians when we hear such story? What are the possibilities of a bank that has gone through these processes or still going through, like in the case of the HoldCo, or such a bank just folding up?
I think that rumor was, I think it's some people that are just being mischievous, because for a bank to even fold up, the signs will actually even be there. Right, it's not something that happened overnight. For instance, the bank that the CBN withdrew the license over, I think about 3 years ago, it was clear to everybody that this bank is going through troubled waters. So the bank that the rumor was circulating is a relatively strong bank. It's not one that will quickly just go under. Like you mentioned, the banks just raised capital. So it's just some people being mischievous. And I think also maybe we also need to make an example of some people that are causing a lot of unnecessary planning in the industry.
Yeah, well, I hope we can do that. But thank you so much for clarifying that for us. Head of Financial Institutions Ratings at Agusto & Co., Mr. Ayokunle Olubunmi.
Thank you for having me.